welcome to NDTV Profit. Fortis Healthcare, that's a stock that is in focus. Overall revenue growth of around 12.5%. Profits have gone up around 2.9%. Now, it's mainly higher interest cost that has impacted profitability this time around as well. To understand more in terms of what do the numbers actually mean and what's the outlook going ahead, joining us on the show are Dr. Ashutosh Raghuvanshi, MD and CEO at Fortis Healthcare. Dr. Raghuvanshi, good morning and welcome to the show, and a pleasure to speak to you at NDTV Profit. Firstly, overall, if I have to look at the street estimates, the profit number has missed what the street was estimating, and there has been an exceptional item that has impacted the profitability this time around. Overall, how has the quarter been? Has it met your internal expectations?
Thank you for having me. You're right that it is the exceptional items which have dented the profitability. However, operationally, if you see that this quarter has been quite decent, we all expect that we keep on improving our performance, and quarter on quarter we have seen improvement in our EBITDA levels. This quarter was around 21.7%, and that is what we expect to grow further from here. So the numbers on both the hospital side as well as on the diagnostic sides were quite in line with our expectations.
Okay. Let's break this down between hospitals and diagnostics, indicating the diagnostic business first. The revenue also has been absolutely in line with what the street has estimated. Margins also pretty much in line in the diagnostic business. So from here on, how much more capex will you be requiring to expand with regards to the diagnostic business?
Yeah, so the diagnostic business, as you know, is not a capex heavy business, and we have invested quite heavily in specialized labs, especially on genomics side. We have put 2 new labs. We have put a transplant immunology lab in Bangalore recently. So with that, we do not require any major capex this year on the diagnostic side. However, at the same time, we are strengthening our collection network of so that the lab profitability, individual lab profitability improves, and we are looking at other costs as well and growing our top line. We expect that the top line this year should grow in double-digit numbers, and that would certainly flow to the EBITDA as well.
Okay, so when you say the top line will grow in double digits, which will flow into EBITDA, how much of that growth will come in from the diagnostic space and how much of it will come in from the hospital space?
Yeah, I was speaking specifically about diagnostic at that time.
Okay, so I will, Dr. Raghuvanshi, I'll interrupt over here. So when you're talking about the diagnostic space, what is the game plan to reach this kind of a double-digit growth? Because, you know, opening a diagnostic company is slightly easier than expanding it, right? Because considering the kind of players and peers that are already into the system, market share is the key from here on. So what's the strategy?
Yeah, yes, you might be aware that, you know, we had certain challenges in terms of changing our brand name. And that did impact our business to a large extent last year. And now we have established the new brand of Agilus quite firmly. And we believe that now from here on, we will see a consolidation on our growth. We are one of the oldest diagnostic companies in this space. And we have a lot of focus on the high-end specialized tests. So that would be the backbone for growth over here. We are not doing, though we do all kinds of tests and we do a lot of wellness testing as well, but we are not doing run-of-the-mill tests, and we are doing the entire spectrum. And that is the strength of this business. So as I was saying earlier, we have expanded the network of collection centers, and that focus will remain. We will also open the company-owned service centers as well, which would further enhance our throughputs and growth. We are putting a lot of emphasis on digital marketing and other areas like that as well.
Okay, so all of this to achieve that double-digit growth in terms of the diagnostic business, which will translate on the EBITDA and the margin front as well. Let's discuss about the hospital business. Taking the aggressive expansion plans that you already have in place, I mean, between FY 26 to 29, you're looking to add around 2,000 beds already. From here on, what is the outlook? What will that take your top line to, considering all of this?
So, the brownfield expansion is a major part of our expansion plan. Other than that, we have had two acquisitions. One, we are just in the process of completing the transaction, which is Shriman Hospital in Jalandhar in Punjab. And we have got a hospital called in Manesar in Gurgaon, which we acquired earlier. So along with this, the rest of the beds are all brownfield beds. And we expect the occupancy levels, which are currently at about 69%, to go up to about 72% on an enhanced bed base. So that is going to be one of the major drivers of growth as far as the existing hospitals are concerned. Plus, since these are mainly brownfield expansions, the margin expansion is going to be far higher than the greenfield compared to a greenfield hospital. So that is the objective, and we have had about 14% growth this year, and we expect this 14-15% growth or even higher to continue.
Okay. Apart from this, overall, so what is the kind of capex you're looking at from a hospital business perspective as well? And what will that entail in terms of your borrowings? Because interest costs are seeming slightly higher in this quarter as well.
That's right. We have about 500 crores per year of capex committed for next 3 years, but that is all for this brownfield expansion, replacement capex, and upgradation growth capex. So all that will be taken care of by the internal accruals. However, the reason why our debt levels have gone up is the recent acquisition of the PE stakes in the diagnostic business. 31.8% stake in the diagnostic business we acquired from the three PE companies quite recently. So that has increased our debt ratio, but at the same time, I would say that our balance sheet is still very healthy. Our debt to EBITDA ratio is about 1.1, which is very comfortable. So until we have some very large acquisition, we are in a very, very comfortable position at the moment, and we expect the debt levels to come down over the next 2 years.
Okay. Now, taking all of these into consideration, if you have to look at the year-on-year growth, this year, I think around 12 to 13% double-digit growth is what you've already seen for the full year. Previous years have been slightly lower. I think this 2022 was a year where it actually went up to 40-41%, right? From here on, what's the anticipation in terms of growth for your top line and your bottom line, taking into consideration the plans and the strategy that you've already put in place?
Yes, so we expect 14-15% growth to be there in the coming years as well. And that trend will continue. And we are already seeing that our occupancy levels are good, and we will continue to see a similar growth.
Okay. My very two quick questions I have is, one is with regards to IHH Healthcare, they've escalated their legal battle against Daiichi Sankyo, and they're demanding a $1.3 billion in compensation regarding Fortis Healthcare acquisition. Any comments on that? Does it impact Fortis in any way? Just a clarification.
No, it doesn't. It is a sub judice matter, so I can't specifically comment on that. But as far as Fortis operationally is concerned, the legal issues are not impeding us in any way operationally. So I would say that, the legal woes are behind us, and we are looking forward to a sustained period of growth.
Right. And doctor, taking your expertise into consideration, the recent hue and cry with COVID-19 cases increasing, any comments on that as to what is happening and any conversations that you know, hospitals and doctors are having with the government as well?
Yeah, there have been no specific conversations. However, COVID-19 is now an established disease, and many of the diagnoses which have happened in the country recently are incidental diagnoses. Patients had pre-existing conditions, etc. So it is there to stay, and many other countries in Southeast Asia, Singapore, etc., has also seen an increase in the number of COVID positive patients, but the hospitals are now very much geared up to take care of these isolated cases as and when they happen. Most of the illnesses are mild and doesn't require hospitalization. So that is where this disease is going to become like another form of cold or another form of viral infection.
Hello and welcome to NDTV Profit. My name is Varsha. Well, earning seasons is out there, and Gujarat State Fertilizers and Chemicals is in focus today. Now, this is on the back of Q4 numbers that the company has posted. The highlighting factor here was margins. So margins were at 4.2%, EBITDA margins versus 1.3% last year, and net profit was also up almost 190%. But to speak about the numbers, how was the quarter and what's the growth outlook